Eric Muathe with Muathe.com with the US market analysis for the weekend of May 7th and May 8th, 2016. Let's take a look at markets here with about 45 minutes to go before the close of Friday's session. Let's take a look at the charts. And we begin by taking a look at the Nasdaq, which is having a down week, of course. And we can go back to the highs on the weekly chart. And this line was always going to be a problem for the Nasdaq. In fact, for also the S&P 500 and the Dow. So once we hit that topside resistance line on the weekly, we can see that we are getting this last couple of weeks to the downside. And also there was also another line, and this is also similar to that of the Dow and the S&P 500, that the market had come back and was testing the break off the highs of 2015. So we can draw, actually let me draw this a little different, which should be aligned somewhere here. So this break in the RSI brought the market off the highs, and so we were seeing the market coming back to test that line. And again we saw resistance on that weekly line. So those two lines were a problem. The market was unable to move above those two lines, and as of right now, week to week, the market did get this most recent pullback. Now of course we got the pullback. The question is now what next? And if you take a look at the Dow from the RSI perspective, take the RSI lows line, extend it out, you can see that over the last 2-3 days the market has come back to this RSI lows line, and we are seeing support right now. As long as this line is holding on a day-to-day basis, one can assume that the market wants to move higher. And there's also another line that we can look for guidance, and it is this RSI movement here. Once we moved above that range here, the market came off the lows of February, so we can draw a line from there, which I call the uniformity line. So a simple line, and you can see that that green line is coming into play right now, with the market doing its best to hold. So as long as the market is bouncing on those two lines, we have to assume that day to day things look like they might be pointing to the upside. And of course, since we have well-defined lines, we know that if the market were to break those two lines, then that is when we will see a major drop. For now, the market is holding. We have to assume that that suggests that, given the support coming off this line and also the support coming off the RSI lows line, we have to assume that the market is suggesting that as long as it is holding on those two lines, we have to assume that the market is to move to the upside. And of course, a break would suggest that now the market is due for a drop. Since we can only see what we have in front of us, which is that the market is holding on those two lines, for now we have to assume the daily is suggesting to expect a swing trade to the upside. Take a look also at the Dow daily, showing good support at an upward sloping 50-day moving average, which is good net. Also, we are seeing the market coming back to test this level here, this RSI movement, and a breakout on the RSI short term brought the market off the lows. And of course, we've had a nice run since then, so we can draw a line from there. And again, we see that the market has come back, it's hit that same level, and as of right now it is showing good support on that green line. So as long as the daily is looking constructive, we have to assume that the market wants to bounce, and we can only turn bearish on the daily when we finally break through the 50-day moving average, or if and when we break through this green line of RSI daily support. If you take a look at a 1 month hourly for the Dow, and here I am using RSI setting of 26 on my hourly chart. So RSI setting of 26, you can see that over the last couple of days, here on the hourly, markets were making lower lows in price, but the RSI was showing an improvement, and that positive divergence might be the reason why the market is having a slight bounce as of Friday. What's actually interesting is this line here goes back to the lows of February, and let me show you that. So if you take a look at the lows, going back to the lows of February, January here, and extend a simple line, you can see that the line that we had drawn previously on the 1 month chart was right there. So that line goes back. It's a good support, which might explain why the market is not dropping. And again, a reminder here, we are using RSI setting of 26 to analyze this hourly chart. So that's one view. The other view is also bullish. If you go back to the lows here, you can see that the RSI movement began here. So this entry here on the RSI, we draw the uniformity line, and simple line, but gives you a lot of information. You can see that it held once before during these lows right there for the lows there, and here we are having multiple attempts to break the green line, but we are holding very well, and the market is improving while it is holding. Prices are making lower lows. That is good enough to generate some type of energy, which might be the reason why we saw that bounce off the lows of Friday. Take a look at the daily chart for the SPX. Of course, here holding an upward sloping 50-day moving average tends to be constructive and good. Also, same line we've been discussing in the other major markets, a simple RSI line connecting the lows is coming into play, with the market showing support right there, which is good support as long as the market is bouncing on that line. And there's also the line that does correspond with the move off the lows. So this RSI moving above that range began this nice recovery in the market. We draw a line from there, and again we can see that it makes good contact with the blue line. So those two lines, as long as they are holding, we have to give the market the benefit of the doubt day to day. On the hourly for the SPX, just a quick note here, same type analysis, which is this movement off the lows here of February. And of course, the market has been on a nice run since then. Draw a line from there, and you can see that the recent move off Friday's lows makes a lot of sense, because the same green line was support here in April for the lows of April. We've held here and again throughout this period while the market was making lower lows, and again that positive divergence and support on the green line is the reason why the market is creeping to the upside as of the lows of the pre-market and early morning on Friday. Now, all that has been pretty much bullish argument for markets to continue high. I want to show you one way to look at the market on the hourly short term, and it is the line going back to the lows, a different line. Now that line here was the recent break coming into late April, which was off the highs there, and so we can draw a line from there. Short term, I think hour to hour, the market is coming back to a level where it has shown resistance before. Here, with the rejection on the red line for the highs there, and Friday with about half an hour to go before the close, we are trading back to that level. So I think that would make sense that the market could stall. So again, that line goes back to the break. Draw a line from there. If we can't move above that red line, then hour to hour we might be pulling back. And so there's a different type of an argument there that maybe we've seen the best for the market for now. Also, a simple backtest line, just extend the same line, and you can see that it gives you a lot of information. Once we broke through here, we came off the highs, resistance here for the highs here, and as of Friday we are back to that level. So maybe we begin the week with a little bit of a pullback given this red line. Before I conclude here, let's take a look at the long-term monthly chart here. Again, go back to the all-time highs for the SPX, and I believe until the market can clear the all-time monthly closing high, we have to assume that the market is at the best range bound. So 0107.39 is the current all-time monthly closing high. Without a breakout, I don't see how this market continues much higher, because this has been a problem. The market has failed to break out on many occasions, trying to break out during these months, and failed to hold above 21 07.39. So a breakout is needed if the market is truly to see much improved highs. For the Dow, on the monthly, market bulls want to see the Dow take out its all-time monthly closing high, and the level to watch there is for the Dow to gather enough energy and break out above 18,132.70. Keep in mind that we've tried on many occasions to break out above that level, and we failed here during all these months. All these were breakout attempts that failed. So if the market is to stage a major move, it needs to break out above 18,132.70. Take a look at the Nasdaq, because the Nasdaq has a slightly different point of view. Here on the Nasdaq, we can see the possibility that the market could actually take out this monthly closing low for 2016. So set an alert there. Should the Nasdaq break below 455.7.95, any break of that would actually be a major sell signal. So just keep all those numbers. Either we get a breakout in the S&P 500 or the Dow, or maybe the market turns down and breaks through 455.7.95 on the Nasdaq, which would be a very bearish development. Eric Mwadhe@mwadhe.com. Enjoy your weekend. Be on the lookout for this weekend's world market analysis. Subscribers, I'm going to have part 2 ready for you at some point during this weekend. Good luck, peace, and blessings. I am out. Woo! Yeah.